We are in Thanksgiving week, and there's a lot of things to be thankful for. And personally, I think that these three lenders are perfect for you to be thankful for as we get near the end of 2022, because these can be the ones that carry you into 2023 and give you the funding that you need to make it your best year ever. But before we jump in, I want to give you a first notice here that if you're talking about getting money in 2023, we are having a live training on December 6th at 1 o'clock on, which is Tuesday, about get your 2023 business finance blueprint. We are not going to just dive into three. We're going to dive into the exact blueprint you need to get the money to grow in 2023. How do you get money with bad credit? How do you get money as a startup business? How do you get hundreds of thousands or even millions of dollars? How do you get SBA loans? What are all the funding options that you're able to get approved for? How do you easily and quickly get approved for the most amount of money in loans and credit lines for your business? We're going to decode the entire thing right here. So make sure you register. It's 100% free to attend, and you can register at creditsuite.com/blueprint. That's creditsuite.com/blueprint. So make sure you register to get your financing blueprint for 2023. So what can you do with a business loan, right? There's a lot of lenders out there who can help you get the money that you need to grow. And let's be honest, if we have the money that we need, then we can grow faster than we're growing. And when I talk to entrepreneurs, 100% that we survey on this topic all want to grow faster than they are currently growing. So if you are like me and so many others within our tribe, then you're probably wanting to grow faster than you are. And these are the lenders that can help you do it. Financing is the key to help you get the actual growth that you want to see next year. Now, what's nice about these lenders we're going to talk about today is they offer flexible guidelines. What I mean by flexible is they work for startups. They work for people that have credit issues. But if you don't have credit issues, if you're not a startup, they work really well for you as well. You even get more money at better terms if you're lower risk. So the flexibility allows higher risk borrowers to still get approved for the money you need. And the flexibility allows for lower risk borrowers to still be able to tap into that money and get it at better terms. And the other thing I love about these three we're going to dive into today is they are notorious for high loan amounts. These are three of the highest loan amount programs that we've ever dealt with. And as you can imagine, being that I've been doing this now for 20 years in financial services, I've worked with a lot of financial products. And when I look forward to be the best, the ones to really be thankful for, these are ones that give us fast approvals. They give us easy approvals. They give us money, whether it be credit lines. We're going to talk about those and loans. And then also they're just kind of easy to get approved for. They've got that flexibility that we need. So we're talking about getting good rates as well, which means minimal fees, lower interest rates. So this to me is what makes these three lenders the three to really be thankful for. By the way, if you're just coming in, tell me where you're coming in from. Give me a shout out. Tell me the state you're coming in from. Tell me the company that you're coming in from. And I'll give you a shout out here right on the stream. And Malik, thanks for coming in. Melissa, thanks for coming in and saying hello. And Nicole, thanks for coming in as well. But have my LLC, but haven't been in business for 6 months. We're going to talk about options that will work for you today as well. And these options are coming from alternative lenders, right? And what we like about alternative lenders is this, is back in the day, even 10 years ago, we used to get money from banks. We used to go to Bank of America. We used to go to Chase. We used to go to Regions. We used to go to one of these big banks, right? Well, these big banks are called conventional banks. And the problem with conventional banks is they're very conservative with their guidelines. It's very difficult to get approved there unless we have really good personal credit and business credit and years of tax returns to show profits and collateral equal to amount that we're borrowing. A lot of us just don't have that. So as a result, there was a long period of time where business owners really struggled to be able to get money from these conventional banks. Then about 12 years ago, actually going about 14 years ago, these alternative lenders hit the scene. We call these alternative lenders. We call them fintech lenders. A lot of people call them online lenders. And these online lenders really created an entire new space. And there's this radical shift where 90% of money used to come from big banks, conventional banks. Now 90% of money comes from these alternative lenders. So now, for the time ever, we're seeing it easier than ever to get money because most money is coming from online lenders, fintech, alternative lenders that have these looser guidelines and conditions than traditional lending. It's just easier for us to be able to get approved. And that makes it easier for us to actually be able to access the money we need to grow. Okay. And because the qualifications are based on a strength in our business, not everything to do with us personally and business wise. What I mean by that is if we look at a conventional bank loan, if we look at an SBA loan, well, we need to have good personal credit and we need to have good business credit. We need to have good tax returns for the business. We also have to have strong personal financials. We need to have collateral to offset the debt. And SBA's requirements want them to take all business and personal assets as collateral. So the problem is that we have to be good on the personal and business side, and everything has to be solid to get these big conventional loans. But now with these alternative lenders, well, the qualifications are based on one strength. We're going to talk about the 3 strengths that you can use to qualify. We're going to talk about my 3 lenders or 3 best programs within each one of those strengths, so you really know how you're able to kind of move forward and how you're able to get approved. The other thing that I like about this is that, look, with these alternative lenders, just more people are getting money than ever before. And this helps us get approved for more money as well. And that really gives us the money that we need to successfully grow into 2023. Okay, and Nicole, we're going to talk about getting money when your business less than 6 months to know. San Diego, Houston, Texas is in the house as well. And Nicole says, help me here. I'll pay you. You don't have to pay me. And the nice thing that we're going to teach you today is we never charge you a dime for financing. I'm actually going to give you the roadmap to succeed, what you need to know. And therefore, you're going to be able to take action at the end of this training to actually get the money that you're really looking to be able to get. Okay, and Nicole is also bringing that up. Says, look, I have a business account LLC, but they won't give me the money because I haven't been in business for 6 months. So I'm going to pull this comment on the screen because if you're in this scenario, if you can't get money because you haven't been in business long enough, you can't get money because you have credit issues, you can't get money because you don't have collateral, we're going to talk about options that will work for you in all those scenarios. And we've got good afternoon from New London County, Connecticut. Thank you. ABCDEFGHI Investing LLC at Albany, New York is in the house as well. So thanks everybody for coming in. Okay. So how do we get financing to grow the business? Well, look, there's countless options, but there's 3 things you need to know. I call this the 3 C's cash acquisition formula. It is your code, the most important rule for getting money into 2023. It's the rule to understand how much money you're able to get. A friend of mine just texted me before I came live here and said, hey, here's the scenario. Can I get money? Do you have access to hard money lenders? And I said, voice message. And I said, look, here's how the system works. And I explained to him these 3 C's formula. What's nice about this is it's super simple to know, to realize how it works, and to memorize. And it's going to tell you exactly the kind of money you can get now and through the lifetime of your business. And here's how it works. To get an SBA loan, to get a conventional bank loan, you have to have all 3 of these things. There's 3 things lenders really care about. We call the 3 C's: cash flow, collateral, and credit. Now, there's another C out there I talk about a lot when I talk about fundability, okay? But for the matter of what money can you qualify for, and by the way, that 4th C is character, which means your fundable foundation. But when it comes to getting money, there's 3 ways to get money, and it's based on one of these 3 C's. And by the way, again, if you're just coming in, give me a shout out, tell me where you're coming in from, and give me your company's name, and I'll give you a shout out right here on the live stream. So that means that there's 3 different ways you can qualify for money. You need to figure out what your strength is. And what your strength is will determine your ability to get money. Now, if you have none of these strengths, I'll talk about a solution for you today as well. But you've got to start by knowing which of these strengths you have. The first strength is cash flow. Do you have 6 months or more of consistent cash flow? As Nicole said, hey, I can't get money because I don't have 6 months of consistent revenue. So if that is you, if you are a startup and you don't have 6 months of this, that means you can't be looking for financing that's based on this. Now, when you're in business 6 months to a year, it does open up this funding pillar per se. But if you're not, then this pillar isn't going to work for you. So then we got to look at the second C here, which is collateral. What assets do we have, or does someone else around us have, that could serve up as collateral? Do we have stocks, bonds, 401ks, IRAs, or does someone else, right? If I want to get money to launch a business, I can go to my dad, and instead of my dad giving me 25 grand, my dad could leverage his stocks as collateral, as bonds, as 401ks, IRAs, still make the money and the return on those, and then leverage those as a way to be able to get me the money that I need. Maybe I have equipment. Maybe I have inventory. Maybe I own an e-commerce store and I'm selling e-commerce online. Maybe my grandpa has a big backhoe that he doesn't owe anything on that I could use as collateral as well. Maybe I have commercial real estate or I want to buy commercial real estate. Maybe I want to flip houses. Maybe I own homes free and clear. Maybe someone around me has these assets that could be pledged as collateral. The bottom line is, do you or someone else have something of value, an asset that could be pledged as collateral? This is the biggest category of funding that exists in the business world because there are so many assets that could work as collateral. You could be an insurance agent or buying an insurance company and use their book of business as collateral to get money. So the question is, what do we have that's an asset of value that can be pledged as collateral? If you or someone around you has one, well, that opens up this whole pillar of funding as well. And then we get into that third pillar of funding, which is credit. And on the consumer credit side, well, do we have good consumer credit? Or do we have a partner or a guarantor, somebody that can sign for us that does have good credit? This opens up funding as well. Now, what's nice about this 3C's formula is you only need one, you don't need the other. So what I mean by that is if you do have 6 months of consistent cash flow, then you don't need collateral or credit. You could just use that 1C to get approved. But if you have good credit or a guarantor that does, and you have no collateral and no cash flow, well, then you could just use this C to get approved, the credit C, and not have the others. So what's nice is each one of these works independent of the other. If you have one, you don't need the other two. And again, if you don't have any of these, that's when you really want to consider the business credit side of credit. And the way I explain it to entrepreneurs is, look, if you don't have a lendable strength, and by the way, these are the lendable strengths, then you need to create a lendable strength, and you can create a lendable strength by building business credit. And what's nice about business credit is you can get money in your first week on net 30, net 45, net 60-day terms, and then you get more and more access to money as you go. I have found that with business credit, 85% of what you need to get money for, you could use business credit for. And business credit's the only real kind of funding beyond crowdfunding and grants that you can get regardless of these 3 C's. So if you say, I don't have any of these C's, well, then the first thing you really want to think about is who around you does, who around you has good credit, who around you has an asset that could serve up as collateral. And if you don't have anybody around you that has any and you don't have any, then we want to look at options like grants. We want to build business credit and use it as a way to fund for a business to fund itself. We want to look at crowdfunding if we actually have a really good, unique idea, like crowdfunding like Indiegogo, or this is called rewards-based crowdfunding, where it's Kickstarter, Indiegogo. Or maybe we want to now go to the equity side of money. Maybe now we want investors, private investors, angel investors, venture capitalists to come into the business. So these are all kinds of options that work outside of the 3 C's, but the 3 C's are going to account for about 90% of the money we're going to get. And then business credit and grants and equity crowdfunding and rewards-based crowdfunding can help us get that other 10% if we don't have one of these C's. So the key here is that we're getting money based on a strength. And then, as a result, we don't need all of these strengths. If we had all the strengths, we would then be moving forward, we'd be getting something like an SBA loan. I have Atlanta in the house. I have Albany, New York in the house. I have Arizona in the house as well. I have Business is Sisters Empowerment Movement, nonprofit organization. I love that. Thank you for coming in. Hey, we love you, bro, from 360 Booth, Houston, LLC. J-Dub, thank you, man. I appreciate you coming in. This guy is a real dude. Thanks, Nicole. I appreciate it. New York City's in the house. It doesn't okay, and Affordable Construction LLC in Albany, New York. Thanks for coming in. And Tyra General, DC Metro area, company to Greater Capital. Thanks for coming in as well. Okay, so let's talk about that first C, cash flow financing. So this is one of my favorite options here. It's called Fundbox. And I love Fundbox. It's one of the easiest to qualify for credit lines we've ever seen. We deal a lot with credit. We deal with a lot with credit lines. And when we come into getting the best credit line, Fundbox, while they're still around, okay, because they're not doing the best, so we might not see them here for 6 months, 12 months down the road. So we have a limited window to get in and get our money while we can. But again, we can get upwards of $150,000 in credit lines from Fundbox, and the approval decision takes as little as 3 minutes. We get access to the credit lines the same day. So it's really, really fast money, and how much we get approved for is based on our revenue. So if we have consistent cash flow for 6 months, and by the way, Nicole, this may even work for you. If you have consistent revenue, even if you've been in business less than 6 months, there's still a possibility Fundbox may approve you. They don't have really strong credit requirements. They're about a 600, 620, maybe even a little less than that. You can get approved. And again, 3-minute approval, funding within 24 hours. Pretty cool. All you need is consistent cash flow. And you can get approved at creditsuite.com/fundbox. Now, I know. I said 3 of these I was going to give you, but I can't help myself and not giving you more. Another one is called Blue Vine. And Blue Vine is very similar to Fundbox. They're a little bit harder to get approved with, but you have a longer time to pay them back. So your payments are lower with Blue Vine. It's a little bit tougher to get approved. You need to have about a 620 FICO score, and you need to have consistent cash flow for 6 months or more. But Blue Vine is an alternative to Fundbox. And then our sales team, if you call for a free finance assessment, has a third one called Credit Key, and you can't really go through Credit Key direct. You have to have someone like us to put you through Credit Key, but we see a lot of approvals through Credit Key as well. Yesterday, I was looking at approvals, and we had $15,000, $18,000, $50,000 approvals through Credit Key. They're another one that will approve you just because you have consistent cash flow or revenue. So Blue Vine, Fundbox, Credit Key, 3 phenomenal credit lines you can get when you have about 6 months worth of consistent revenue. Fundbox is one of the easiest to get at creditsuite.com/Fundbox, and Credit Key is the easiest to get. And again, I'll pull up our information at the end of this training. You can get with our team, and our team can talk with you more about Credit Key as well. Okay. So again, I went through a lot of the basics of Fundbox. Fundbox, great way to go. Love this lending option if you have the consistent revenue. Now, keep in mind, when we get together December 6th, I'm going to map out a lot more options for you than this. We're going to talk about merchant cash advances. We're going to talk about revenue lending. We're going to talk about first, second, third position revenue lending loans. We're going to talk about term loans. So I'm only covering my 3 top and sprinkling in a few extras. But again, if you don't forget, go to creditsuite.com. Let me go back. I'm going to go back real quick just so I remember that link. And then I can tell you about where to go to get that. So if you're tuning in and you really want the max financing options, right here it is, creditsuite.com/blueprint. At creditsuite.com/blueprint, we'll be going through and expanding. And the reason for that is that today we may go through 30 minutes, 45 minutes max of training. When we get together Tuesday, December 6th, I'll be going at it for about an hour and a half. So I just have a lot more time to give you a lot more options. So don't forget to register for that event at creditsuite.com/blueprint. All right, let's talk about that second C, collateral-based financing. My favorite one there is a securities line of credit. And what this does is it's no doc, doesn't require any income docs. So it's not based on revenue. We can get this as a startup. We can get it as a brand new business. We don't need to verify tax returns. We don't need to verify bank statements. All we need to do is have stocks or bonds. And if we have stocks or bonds, or someone around us does, then we can borrow as much as 90% of those stocks and bonds for a rate about 5%. Doesn't matter how bad our credit is. Doesn't matter if we don't have any other form of collateral. Doesn't matter if we can't verify cash flow. It's no doc. It doesn't matter. All we need is stocks and bonds worth about 25 grand or more from us or somebody else, and we're able to get approved. Let me give you an example. If I go to my dad right now today to get money, and I say, Dad, I'm going to launch a business. I need 25 grand. My dad would help me. He trusts me. He knows I would pay him back that money. But the problem is my dad doesn't just keep an extra 25 grand laying around in his bank account. So what my dad would have to do is my dad would go sell his stocks and bonds. He would take 25 out of his 401k, for example. All of those would incur penalties. If he liquidated the stocks and bonds for 25 grand, if he tapped into the 401k, all those would come with consequences for him and tax penalties. Now, if I go to dad and say, I have a way for you to give me the money without any consequence tax-wise, and I talk about securities-based financing, and I say, look, you still keep your money invested in the stock market. You still earn a rate of return. You still earn interest like you always have. Nothing changes there. But now I'm getting a line of credit against the stocks and bonds for 25 grand. In this example, I could get it for hundreds of thousands. You can get it for hundreds of thousands. I'm just using 25,000 as an example. But now I pull out 25,000 I get a line of credit for 5%. My payment's super low. My credit doesn't matter. Other collateral doesn't matter. Cash flow, nothing matters. I get that. 5% interest rate. I borrow my 25 grand. Now my dad still earns money in stocks like he always has. There's no tax penalties. And I get my grand to launch my business. And then I can either pay the 25 grand back to my dad. I could pay him interest. I could give him equity ownership in the company. So the reason I'm explaining this to you is that, look, there's two sides of every one of these coins. There's the I have stocks, bonds, 401ks, I have inventory, I have equipment, I have real estate I can leverage as collateral. And then there's the I have somebody else that does. This somebody else may be somebody affiliated with you. This somebody else may be somebody not affiliated with you. There may be somebody that you meet at a meetup that wants to invest into privately owned businesses and wants to invest into an entrepreneur like you. And see, this is something we don't want to lose sight of. The biggest jump in capital for businesses in 2022 has been from private investors, people like you and I, investing into privately owned companies. A lot of things have changed to make it where people don't have to be accredited investors to invest in us anymore. So now what happens is just your average day Joe Schmo that doesn't want to invest in real estate because it's in the decline, and doesn't want to invest in the publicly owned companies in the stock market because who knows what's happening there. Now they can invest in a privately owned business like yours, and they get a rate of return there. So we see this gigantic amount of people now investing into businesses like yours and mine at a level we've never seen. So I don't want you to lose sight of that, because even though you might not have stocks and bonds, there's a very good possibility someone around you does, and they absolutely will tap into that and get a rate of return on that by investing into you. If you are a good entrepreneur, if they see possibilities of you succeeding and your business idea exceeding. So remember, even if you don't have stocks, bonds, mutual funds, you're still able to tap into somebody else's, and that opens up two probabilities for you getting funding. And like I said, believe it or not, there's more people wanting to invest in privately owned businesses now than ever before. So what that means, it means a lot of people out there that would love to do this still earn the money they've always earned. Think about this. Think about it from your perspective or somebody else's. This is what I call double dipping. It really is double dipping, because you have money in the stock market, and that stock market's earning you a return. Maybe you lose, maybe you win, right? But you're in the stock market because you think it's going to go up. Now you borrow against the money that's already making money in the stock market, and now you use it to grow a privately owned business. So you literally are double dipping and using the same money for two things. You're invested in the stock market and privately owned businesses, or publicly owned, and now you're investing and getting a credit line against the money, and it's working for you in the stock market, and it's working for you in private business as well. This is a super smart, one of the smartest ways I've ever seen to get money to fund a business, and it works for your stocks, bonds, and mutual funds, and also somebody else's. So some things you really want to think about there, because again, this is a good possibility that you're able to actually come in and get approved. Okay, and Melissa says, sell prop now, Capital LLC nationwide. Love that. Kayam says, what is their minimum monthly revenue? When it comes to Fundbox and those type of sources, they don't really have a minimum monthly revenue, but you'll get approved based on what your monthly revenue is. So what I mean by that is that if you only have $10,000 a month in revenue, you might only get a $2,000 or $3,000 credit line. You're not going to get 100, right? But if you have $100,000 a month in credit line, well, then you could probably get $10,000, $20,000, $30,000, $50,000 or more in approval. So there's no minimum for Fundbox to get approved, but your approval amount will mimic, your revenue, not equal to, but the higher your revenue, the higher your actual approval amount's going to be. So good question, Kim. Appreciate that. And Nicole says, hey, I started from the bottom. We help people every day. Man, sounds like you had a lot of stuff happen. Gave me a check. Man, his homeowner gave you a check and it cleared 4 days later. Then he canceled a check. That sucks. And so many of us have these negative things happen where people take advantage of us. How can the bank cancel a check that they already cleared? I don't know. That's a good question for the bank, though. I can tell you that much. Okay, so it's crazy. It sounds like a crazy scenario. And all of us are here because we need capital, because typically we deal with these crazy circumstances that put us behind, and we want to get the money we need to grow to get ahead. So let's talk about this third C, credit-based business financing. And the best option here is something called credit line hybrid. Now, credit line hybrid doesn't have any income requirements. It doesn't have any asset requirements. It doesn't have any time in business assets or requirements either. So what I mean by this is that you're able to get approved, no doc, even as a startup, even if you don't have any collateral. It's completely unsecured. Now, you do need to have good credit or someone around you that has good credit. So you need about a 680 FICO score or higher, or a credit partner that has that. And how many inquiries you have, and your credit balances compared to your limits, all those things tie in to your actual how much money you'll get and how much you'll get approved for. But again, this is, if I look at every funding program I've ever dealt with, this is the best I've ever seen. And the reason it's the best I've ever seen is you can get approved for up to $150,000 as a startup. Most of our clients are approved between 50 and 100 grand. Almost all of our clients are between 50 and 100. So you're getting 50, 100, 150,000 even as a startup. It's no doc. There's no bank statements. There's no income statements. There's no P&Ls and balance sheets and tax returns. You get it as a new business. You get it as a high-risk business. You can actually liquidate it and get the cash out, and get the cash out at 0%. You're paying 0% for upwards of 6 to 18 months. So super low rate of 0% for up to 18 months. You can take the cash out at 0%, no doc. You get the idea of why this truly is one of my favorite programs. Plus, you typically get pre-approved same day or within less than 24 hours as well. So it's fast, easy money. All you need is good credit. You don't have it? Then find someone around you that does. A credit partner could be a family member. It could be a friend. It could be a potential investor. It could be anybody that looks at you and respects your business and wants to actually bank on you. Okay, so again, same story of my dad, right? If I go to my dad and I say, Dad, I need 25 grand, instead of him liquidating stocks and losing money on that, he can let me use his credit to get credit line hybrid, to get credit lines. They fund my business. A lot of them report on the business credit reports, not the consumer credit reports. So now I'm building business credit. I'm not hurting his personal credit as well. And he still keeps his money invested where it is. The only way my dad in that scenario would lose is if I default on the credit lines, right? Which I'm hoping that if you're using somebody as a guarantor or a credit partner, you're not going to, dupe them over and then, default on the credit, right? So let's say here that we're all ethical people that are going to honor our commitments. And if we use somebody's credit to qualify, then it's a great way to do it. Now I can go to a potential friend. I can go to a family member. I can go to somebody else, and they can actually invest in my business this way, get an interest or an interest on it, get a rate of return, get ownership interest in the business in exchange for them actually letting me use their credit to qualify for the credit line. Or maybe I already have good credit, then I'm able to qualify for this program as well, up to $150,000 in funding. And by the way, on the bottom of my slides here, you can go to creditsuite.com/CLH. And on the bottom of my slides, you can also go to creditsuite.com/get funding. And you can just submit your information and talk to our finance specialist, and they can talk to you about these programs and more that you may qualify for. But Credit Line Hybrid is the best financing in that third C category, that credit category. And again, half of the people that we deal with are the business owners we help. They don't have good credit. They're relying on a credit partner. So keep in mind, not only are we talking about 3 different ways to get funding, but we're really talking about 5 or 6 here, or 6, because each one of those can rely on us or somebody else. Hey, maybe we can get financing based on our credit or somebody else's. Maybe we can get money based on our assets as collateral, our stocks, bonds, 401ks, IRAs, or somebody else's. So it opens up double the funding options for us, because it doesn't have to be us. It can be somebody else's as well. Now, keep in mind, if you really want to take the stress out of this process, then just give us a call for a free finance assessment. We will actually do 3 things for you that are very unique. We'll do a fundability check. We'll tell you why you're getting denied based on how your business is structured and help you fix that stuff to get approved. We will actually get business credit reports for you for free if you have business credit established. If you do or don't have it established, we'll give you tips and tactics to build your business credit. Look, there's those of you watching this right now and you say, Ty, I don't have any of those. I don't have good credit. I don't have cash flow, and I don't have collateral. Let's be honest. You're not lendable. Why would someone lend you money if you have no cash flow for the business, your credit's bad, reflecting that you haven't paid others as you're supposed to, and you have no assets to offset the lender's risk? In this scenario, you are not lendable. So the best solution for you in that scenario is to create a lendable merit by building business credit. You're able to get 10, 20, 30, 40, $50,000 individual limit credit cards at places like Office Depot or Sam's Club or Costco. We're able to get fuel cards at BP, Chevron, Sunoco. We're able to get auto financing. We're able to get Visa cards or MasterCards. All of this, almost every major retailer offers this kind of corporate credit. A lot of it doesn't require a guarantee, doesn't require a credit check, doesn't require collateral, and doesn't require cash flow. So if we don't have a lendable merit, we want to create one by building business credit. We'll give you on this console tips and tactics to do that. And the third and most important thing that we do is we also will come in and we also do a finance assessment to talk to you about all of the funding you may qualify for. Keep in mind, this was meant to be short today. It's not meant to go through the 30 plus, 40 plus types of funding you may be able to get. It was just able to tap into each one of these three categories to show you the best of each of these three categories. So if you want to see the money you qualify for right now, just schedule online at creditsuite.com/console, or I'm about to throw up our phone number. You can give us a call there too. Also, don't forget to go to creditsuite.com/blueprint, because that is when December 6th, we map out the entire blueprint for you to get money next year. This is every way that you're really going to be able to tap in and be able to get money. So we have a lot more time to decode maybe 30, 40 different ways to get money for your business. And you can tap into our guide on 27 ways to get money at your business if you go to creditsuite.com/27. Look, if you got value from this training, then make sure you check out creditsuite.com/toolbox. And here you'll $100 worth of goodies just by sharing our next live stream. That's pretty cool. And don't forget to go to the top of our page and subscribe at creditsuite.com to be able to get 1 minute tips on channels like TikTok and Instagram, hour and a half training on places like YouTube, podcasts where you can listen on the go. All of our training is designed to help you get money in situations where you normally wouldn't. So take 1 minute to go to the top of creditsuite.com and go ahead and subscribe on those social channels. And don't forget to give us a call for our free finance assessment so we can talk to you more about the money that you're actually able to get for your business as well. And Andre from California, I'm loving your program. I'm thinking about signing up today. That's awesome, man. I'd love to work with you. And Andre says, I have a client looking for about 100K, been in business for 3 years and makes 20K a month. And I was going to add one trade line. That's cool. I think we could definitely help you with that client. So give us a call. We could talk to you more about that. We do have a partner program where you get paid for offering business credit and financing for clients. And a lot of our clients make $2,000 for every client they deal with. So by the way, if you know people that are interested in getting money for their business and those people are around you, well, give us a call. We could talk to you about creating a whole other income stream for your business as well. And Andre says, I also claim personal credit and offer business credit. That's a great combination when you're in consumer credit, Andre, and you're off. So again, give us a call for your free finance assessment. Let's talk about the money you can get right now through these three sources and many others. We have over 1,000 different funders out there that want to fund your business. And the best way to know the money you can get right now is just give us a call. It'll take a few minutes on our team, and our team will tell you all the money that you're able to get approved for right now. So give us a ring at 877-600-2487. Don't forget to visit creditsuite.com/blueprint to be able to register to get your funding blueprint for 2023. And I thank you very much for tuning in and look forward to our next training where we talk about more cool ways to get the money you need to start and grow your business.